Good morning and welcome to the Ashworth Wealth Weekly Market Update. My name is Scott Thomas. This is an interesting one this week. Normally, we're talking about what's going on as far as numbers go in the economy. This one, we're going to be talking about what's going on over in Iran. And we're going to talk really specifically about that, what that is doing to the markets, what's that doing to the oil markets, how is that affecting us right now, and what we can expect if this war continues to go on. We certainly hope it does not, but what does that look like if it continues to go on? Obviously, we are in war with Iran right now. Iran, unfortunately, borders one side of the Straits of Hormuz. They have effectively cut off oil supplies or cut off any transportation through the Gulf. I did read this morning, though, there was one major tanker that went through, didn't have any issues, but most of the big shippers of oil and liquefied natural gas are still very nervous about going through there. I hope that over the next few days or a week or two, that will be resolved. But as of right now, things do not look good over there. I want to read a couple of things and then get to some numbers. As of right now, it looks like the supply of oil and natural gas around the Middle East and around the world, there's a couple of weeks supply. So if this goes fairly short, I don't think it's going to affect things very much. The longer it goes, I think obviously it will affect things even more. Now, how does it affect the US? The US right now is a net exporter of oil. So that's really kind of a double-edged sword. It really kind of depends on which side of the aisle you're on. For the oil producers and the companies, that's a very good thing for them. However, for us as consumers, we are spending more at the pump. We're spending more for, if this goes longer, anything that's produced out of oil, which is just about everything, or if oil is used in the production, that will affect us. So, as of right now, depending on which side of the aisle you're on, it really depends on whether you're going to benefit or this is going to cost. A couple things, one graph that I wanted to share with you is this is a graph of who will be affected the most by rising energy prices. And basically what this is it breaks up, if you take our population from the wealthiest to the poorest, and it's who will be affected the most. Well, if you think about it, the wealthy, if you have a 50% rate, increase in gas prices at the pump, that doesn't really affect someone that's making $1 million or $2 million. They won't even think about it. But the person that is on a fixed budget or a fixed income, when you have gas go from, I think I wrote down some averages here, from 299 to 348 in a matter of 2 weeks, someone that's on a fixed income or a budget, that affects them a lot. So if you look at this graph, it shows that the bottom 10% spend just over 14% of their income on fuel or on energy. And so they are the ones who are hit the hardest. So we feel bad that this is hitting them hard, not like they don't need something else to worry about. So um, again, the wealthier you are, the less you feel this. The poorer you are, the more you feel it. I wanted to kind of share a couple of different things, and what we're telling clients is we're having clients call and ask us about this. As always, we preach diversification. We want clients to be diversified as much as they possibly can. So as the market swings go up and down, the more diversified you are, the less swings that we have. A couple of numbers to keep in mind. Inflation in January was 2.4%. Actually, it was 2.4% for the year before that if you averaged all the months together. So as of right now, inflation has been under control, but this happened. We've only been really in this war for the last couple of weeks. The longer that this goes, the longer it's going to affect the supply of oil around the world, which means it's going to affect oil prices. And as we all know, as we've seen before, if oil prices go up, that affects everything: transportation, manufacturing, getting things from where they're manufactured to where they're sold. So if the price of oil continues to stay high, that will greatly affect inflation. Okay, so a couple other things. Oil has gone, if you go back a month ago, the average last year was about $60 a barrel. And it's interesting, if you looked at the forecast, if you go back to December of 2025 and look at the forecasted oil price for 2026, it was forecasted to be about $60 a barrel. Well, what's happened over the last couple of weeks? Oil went from the 60s up to 120. It wasn't up there very long, but it spiked at just over $119. Today it closed at just over 84. So it spiked and it's come back, but still 84 is a substantial jump from where we were when it was around $60 a barrel. What's happened to gas prices at the pump? Again, Utah's usually a little bit higher than the national average, but we've gone from an average nationally of 299 to about 348. So that's a significant jump, and again, especially for those of lower income that spend a higher percentage of their income on. So again, we're going to watch this very closely. It's going to be very interesting to see what happens over the next few weeks or month. My feeling is that they will get things under control over there, and the Straits of Hormuz will open up. Doesn't mean that that war is going to be over in the next week or so, but I do think they'll get things under control so that shipping can continue through that narrow strip of land, and hopefully the price of oil will stabilize, and that will hopefully keep inflation in check. Anyway, if there's any other questions that you have, please give us a call. We've had a number of clients call us about this over the last week or so. Please give us a call or email us, or if there's anything you'd like us to cover in the future, we'd be happy to do it. Thank you.